Also, Facebook director Mark Andreessen's venture capital firm has sold about a third of its Facebook stake to the tune of over $100 million.
Hello folks, hi, it's Mr. Intermarket Analysis bringing you a review of the FTSE 100 for Tuesday's trading, the 12th of November 2013. Okay, so basically, where are we? What happened today? First of all, obviously, like to send my condolences to those that have fallen, with it being Remembrance Day today. Obviously, there was a 2-minute silence observed for all the for soldiers, etc., in their past and who fought for the country, and certainly respect goes out to them. Okay, so right, so with regards to the FTSE 100, okay, let's see where we are. So basically, let's start with our larger time frames. We always start the large time frames first. The FTSE 250 obviously remains within the resistance zone. It's in a bearish channel as we speak. Okay, still meandering. Obviously we failed to penetrate this key resistance line up here. It's holding previous resistance equals support down here. Once breached, then obviously it opens up the pathway and we shall go back down to 14,700. Okay, obviously we'll see how that plays out. Now let's have a look at the FTSE 100 itself. Okay, so as we all know, the weekly chart we all know is a double top, so double top and you drop. Okay, can't get simple as that. So that's the key resistance line. Unless we break that obviously convincingly on a weekly basis, we have to presume innocent until proven guilty that will act as resistance. Okay, now the candle on Friday was interesting, given the fact that obviously economic data in the US came out better than expected, which means that tapering is on. If tapering is on, Kool-Aid is obviously diminished. Therefore the QE junkies go cold turkey and the stock market sell off. That's what should have happened, but it didn't. Okay, obviously the market chose to go ahead with a fundamental trade, which means a stronger economic data equals a stronger currency. Obviously the US dollar started to rise and the US markets rose with it as well, on the basis that the markets are weaning slowly off QE. Therefore they can hold their own and they can sustain a path going higher. And obviously remember folks, economic data always trumps, or good strong economic data always trumps QE. Okay, and takes QE out of the picture. That's something that you must always focus on. Okay, so very, very important from that perspective. Okay, so now so the FTSE 100 chart, the daily chart. Okay, we have obviously downward sloping trend line up here. Obviously 67, 40 will act as resistance, but very unlikely for us to get to that level, I'd say. Personally, I expect this potential bear flag scenario to play out. We have had a bottoming tail from Friday, which did technically do some damage below. So obviously it knocked out a few stops. Whether that was a stop loss hunting exercise, I don't know. But from my perspective, that certainly has lost some conviction for the bulls. And obviously the concept of previous resistance equals support. To be honest with it, knocking out 6,700 and 6,660 on the day, it is going to be very, very hard. Okay, it's going to be very, very hard. Okay, so keep an eye on that, folks. If 6,700 goes and 6,660 goes, then yep, we open up the pathway down to 6,500, which again, remember this level 6,480 equals a 200 MA, which is the next bastion of support. Remember that level. Okay, when I go to the smaller time frames. Okay, so let's go to the smaller time frame now. Let's go to a 60-minute chart. Okay, now just focusing on the 200 MA. We have an unfilled gap at 6575, which coincides with the 200 MA daily 6580. Okay, so again, that with regards to multiple time frame analysis, that certainly makes sense from that perspective. Okay, so we had this key purple trend line which I discussed yesterday. We broke it obviously on the way down. We've been making lower highs since. We've made a lower low here. This is a potential lower high. Obviously from my perspective right now, the bearish argument has certainly weakened to a certain extent. Why? Because this neckline has been negated. Technically speaking, if a neckline is negated, it creates a short squeeze and the market's moving the opposite direction. Now, okay, that's fine, I understand that, but we have to take it into context. So today, what was today? We had Remembrance Day, the volumes were low. Therefore, when the volumes are low, markets generally tend to float higher, and there's a lot of manipulation in play. Okay, and that causes the markets to go higher. So therefore, a low volume day can, from my perspective, in terms of price action and fundamentals as well, fundamentally speaking, it can't really be taken, it can't be given much respect. It's given less respect than the day that would be normal and would high volume, because that would show the trader's hand. Okay, so as you can see there, the first 60-minute candle from the FTSE was immediately sell off. because it was being obedient to technical analysis. Obviously it's holding a 61% retracement, given the fact that the Yanks manipulated the stock markets higher on a Friday, given the light volume, etc. And obviously today the Yanks were not on board. It's a half trading day, and given the fact that it's Remembrance Day, a lot lower volume, etc., etc., very easy to manipulate the markets higher, especially as central banks want the markets higher. Mr. Bernanke's dollar printing machine is out there. His quants, algos are busy, and they're doing their best at inflating the markets higher, because that's the only way he can survive. And his theory of inflating the markets, obviously to avoid a recovery and obviously erode debt, that's the only way it survives. Otherwise, his legacy, his respect, his honour, dignity, from my perspective, he has one anyway. But generally speaking, that's basically what his whole thesis relies on. Okay, and that's why he lets these algos and these crazy machines manipulate the markets. Okay, but anyway, let's not get into that. That's all noise to a certain extent, well, to a large extent, but it's always good to know how these people manipulate, and so you can understand their thought process and you can take advantage and front run them to a certain extent as well. And the way in which we're doing that is we're acknowledging today was a manipulation day, therefore price action can't really be paid much homage, can't make much homage to it. Okay, you just have to accept it for what it is. It's a manipulation day, and even if it has negated something, especially with regards to a H&S neckline, that again shouldn't really be respected. The H&S still stands, and I still expect the target from 6620 to be hit, and obviously the gap fill below, which is 6570. Okay, although price action is price action, you have to respect it. So what I will do from my perspective is I will certainly take away the H&S and presume that's no longer there, because I don't want it clouding my judgment and my view or bias on the market. Okay, so I'll certainly take that away for now. I'll take away this trend line as well, given the fact that it's been negated and it's been disrespected. What I will just presume from now is the market has made a lower high here, so two lower highs. It's made a lower low here, and this is a potential lower high, which is Fibonacci retracement at 75%, which is 6745. So 6745 will be resistance. If 6745 is taken out, then obviously the next stop we go back to is 6780, and we just trade sideways. Okay, very hard for us to see the market sustain and move higher, especially given the fact that Chinese data has been relatively strong, although inflation is starting to lag, which means slower growth. Okay, going forward, and given the fact that they've have their plenum, and I think every 5 years they have some sort of political, not stalemate, but political meeting, where all the major leaders, etc., get together and forecast the market, not forecast, but certainly you plan for the next, say, 10 years or next decade in which the Chinese economy will grow. And there's already news coming out that they will obviously make sacrifices, which means that they will allow growth to fall down below the 7% level in order to make changes, whether it be social, whether it be demographical, whether it be fiscal, etc., etc. So they certainly want to plan ahead. They're not like the Yanks, who want to print the shit out of the dollar. Okay, excuse my language, and destroy the economy, destroy the world, the global economy, just at the expense that they can live better for the next 3 or 4 years. That's pathetic, that's stupid, and that will obviously lead to their demise, as their US dollar will obviously eventually get corroded and lose all its value. And that's why it's not surprising that the Chinese now are pumping money into the Eurozone. Okay, that's the reason why the Euro is still being resilient even after a rate cut, because the Mr. ECB, Mr. Draghi, knew that the Chinese were obviously supporting the Euro, and even if there was any fallout, obviously the Euro would still remain high. So from his PR campaign perspective, he's obviously he's a good guy now, okay, and he has helped businesses to a certain extent because the expectations are shifted. Okay, so obviously the expectations shifted in terms of costs of production, costs of obviously individuals in disposable income, etc., etc. So I'm not going to go into that. That's economics. That's a lot. I mean, I can talk from that perspective. Let's just try and keep it as simple as possible and as short as possible as well in terms of these videos. Okay, so for now, technically speaking, all the individuals out there that are trading the FTSE, let's be honest, all you care about the technical levels. Okay, so these are the technical levels. 75% fib retrace. Okay, 6750, 6745. Keep an eye on that. That gets negated 6780 again. And obviously, if the Yanks really start to pump the US dollar machine, printing machine, and obviously we can go as high as this, but that needs to be backed by and supported by the Chinese economy. Shanghai was still flat overnight. Okay, so again, that's something that cause for concern. And obviously the Aussie today has been weak all day. Why? Because of the Chinese news. Okay, that they're going to reduce growth, etc., etc. Okay, so given the fact that the FTSE is a commodity index and the commodities are under pressure with gold obviously lower, copper lower, oil has started to move higher, but that's mainly because of the Iranian situation. Okay, that's more geopolitics. That's not going to help the FTSE itself move higher, because it can only move higher in organic growth for commodities, as opposed to the geopolitical fear, obviously a short squeeze. Okay, so from our perspective, again, watch out for that. Okay, again, there's levels there, 6575. It's a lower high, so we respect that as well. A potential retest around the 6660 level. Obviously, I played the short this morning, which was quite fantastic. I got an average of around the 6730 level, 6731. I shorted the markets, covered the positions at around 6710 and lower, and that was a nice trade. I then went long at 6703. Managed to get around 6702 average, and obviously the markets moved higher and I closed plus 15 and got out. I had a long on euro as well, as you already know from my previous video. If you go to it, I call for the markets for the euro to move higher, which it did, and I'm currently sitting on 70 points for the day with subscribers on the live analysis service. So them setups all obviously worked out. Even the oil trade is certainly working out. It's currently trading above 95, 95.2 as we speak, so certainly a nice thrust higher there. Remember, 96 and 98 are my potential targets on the upside, so keep an eye out for that. Okay, so let's go to a smaller time frame now, 10-minute chart. Okay, because this video is getting long as it is. Okay, so what we're looking at here. So basically we've had an upward sloping trend line which has been negated going into the close. Obviously they manipulate the markets higher, and then obviously these guys that are manipulated, they wanted to dump and get out before obviously the real markets opened the following day. So again, the signs of manipulation here again. You can see how they've manipulated the markets higher and then dumped it into the close. Okay, that again is a negative sign, the fact that they dumped into the close, because they lack conviction and lack faith. So keep an eye out for that. Now you've got H&S formation forming here, or again, hypothetical, but as traders that's what we're doing. We have to look at all the potential scenarios and the possibilities and the outcomes that can occur. So that's all we do. Okay, and that's what intermarket analysis gives you the ability to do as well, to forecast into the future. Okay, because all your indicators are leading, not lagging. Not these stupid RSIs and stupid MACDs and so on and so forth. I don't really pay much attention to that. As you can see, all I have is moving averages, and even them I don't really pay much respect, except the 200 MA, and even that can be disrespected at times as well. All they are momentum indicators, that's all they're telling me. They don't give me a signal. All they do is give me a gist of what's happening in the markets, and I don't rely on them solely either, as my subscribers know. But focus on price action, folks. Okay, always remember, if you're driving a car, do you look at the road ahead or do you look at your dashboard? Okay, do you look at the warning lights on your dashboard or do you look at the road ahead? If you're a wise person, you look at the road ahead, so you look at price action only. If you're an idiot and if you're stupid, you look at indicators, which eventually will blow your account and lead to demise. Okay, so don't get me wrong, I'm not anti-indicators. Yes, they can help you to a certain degree, but they can't guide you. It's intermarket analysis that will guide you and give you an edge in the markets. Everything else, from my perspective, because I see it, I witness it, I've observed it, I've seen other individuals fail, because they all come to me eventually for mentoring after they've tried all these 120, 30, 40 indicators that you have now. Sorry folks, they don't work. Okay, the quicker you understand that, the quicker you accept that, the more a better trader you'll become. Okay, and sorry for being blunt, but sometimes it needs to be said. Okay, so H&S formation there on the 10-minute chart. Okay, so keep an eye out for that. Obviously, if you use your Fibonacci retracement there, you probably find it 6735, probably for the right shoulder around there. Okay, and obviously we project lower. So going into tomorrow, we should I expect us to retest that 6700 level again, potentially crack it. If we crack that, then 6660. If we crack that, then obviously we go lower. So keep an eye on that, folks. Okay, so I think I'll call it quits there now. Risk on, risk off, wax on, wax off. Goodbye.